Welcome to New Way Finance Academy, where we empower you with the financial knowledge you need to thrive. Today, we delve into a significant topic, the importance of a good credit score. A good credit score is a lot like a great friend. It opens doors, it saves you money, and it's there when you need it most. It's more than just a three-digit number. It's a reflection of your financial health and credibility. It's the key that unlocks many opportunities, from securing a loan for your dream home, to renting an apartment in a prime location, or even landing that job you've been eyeing. Imagine you're a lender for a moment. Would you lend money to someone with a history of not paying back on time? Probably not. That's exactly why a good credit score matters. It gives lenders confidence in your ability to repay, which leads to lower interest rates, better loan terms, and more money in your pocket. Now let's talk numbers. Over a lifetime, a good credit score can save you thousands, even tens of thousands of dollars in interest. Let's say you borrow $100,000 for a home loan. With a high credit score, you might get an interest rate of 3%. But with a low score, that rate could jump to 6%. That's a difference of $60,000 over the life of the loan. That's not pocket change, that's real money. But it's not just about loans. In some states, insurance companies use credit-based insurance scores to set premiums. A lower score could mean higher premiums. Even utility companies and landlords may check your credit. A low score could mean you have to pay a deposit or even miss out on that dream apartment. So you see, a good credit score is more than just a number. It's a key to financial freedom. It's your ticket to better opportunities and more money in your pocket. It's the stepping stone to achieving your dreams. Understanding the importance of a good credit score is the first step towards financial literacy. Now let's move on to finding out how you can improve yours. Before we dive into these tips, we encourage you to like this video, subscribe to our channel, and turn on notifications to stay updated on all our financial advice. By doing so, you'll be the first to know about our latest tips and tricks to help you navigate the financial world. It's like having a personal finance advisor right at your fingertips, free of charge. So, don't miss out on this opportunity to enhance your financial knowledge. Now, let's jump into these 10 simple tips to boost your credit score. Tip number 1, pay your bills on time. This may sound like a no-brainer, but it's surprising how many people overlook this crucial aspect of maintaining a healthy credit score. When you pay your bills late, it sends a signal to creditors that you might be a risky customer. This can have a detrimental effect on your credit score. It's not just about the big bills like your mortgage or car payment. Even smaller bills such as your utility or cell phone bill can impact your credit score if they're consistently late. You see, payment history makes up a significant portion of your credit score. So late payments, they're a big no-no. Try setting up reminders on your phone, or even better, arrange for automatic payments so you never miss a deadline. It's all about getting into the rhythm of timely payments. Remember, consistency is key when it comes to bill payments. Our second tip is, keep your credit card balances low. You might be wondering, why does keeping a low balance matter? Well, it's all about something called your credit utilization ratio. This is basically the percentage of your total available credit that you're currently using. If you consistently max out your credit cards, or even use more than 30% of your available credit, it can negatively impact your credit score. It's like a red flag to lenders, signaling that you might be over-reliant on credit. So, what's the sweet spot? Try to keep your balance below 30% of your credit limit. This shows lenders that you're a responsible borrower, which can boost your credit score. And remember, lower balances also mean less interest to pay. So, you'll be saving money too. Keeping a low balance not only helps your credit score, but also saves you money in interest. Tip number 3, avoid closing unused credit cards. It may seem counterintuitive, but keeping that old, unused credit card open could actually help boost your credit score. Here's why. Your credit utilization ratio, that's the percentage of your total credit that you're using, plays a significant role in your credit score. Closing an unused credit card reduces your available credit and can increase this ratio, potentially lowering your score. Similarly, another factor influencing your credit score is the length of your credit history. Closing a long-standing credit card could shorten this history, again possibly causing your score to dip. So, unless that unused card is burning a hole in your pocket with an annual fee or tempting you into a spending spree, it might be better to leave it be. Every little bit helps when it comes to improving your credit score. Unless a card has an annual fee or tempts you to overspend, consider keeping it open. The fourth tip is diversify your credit mix. Now you might be wondering, what does this mean? Simply put, having a variety of credit types can significantly bolster your credit score. This mix could include credit cards, car loans, mortgages, and even student loans. Think about it this way. The credit world is like a potluck dinner. Bringing only one dish, say just credit cards, isn't as impressive as bringing a variety of dishes. Similarly, lenders appreciate seeing a diverse credit portfolio. It reassures them that you can handle different types of credit responsibly. It's important to note that this doesn't mean you should go out and apply for every type of credit available. Instead, aim to gradually build a diverse credit portfolio over time. And remember, always borrow within your means and manage your debts responsibly. A diverse credit portfolio shows lenders you can handle various types of credit responsibly. Tip number 5. Dispute any inaccuracies on your credit reports. Now, why is this important? Well, your credit report is like a financial report card. It tells lenders how responsible you've been with your finances. But sometimes this report card may have errors. Maybe you've paid off a debt, but it still shows as outstanding. Or perhaps there's an account listed that you don't recognize. These inaccuracies can negatively impact your credit score. So how do you correct these errors? It's simple. First, request your credit reports from the 3 main credit bureaus: Equifax, Experian, and TransUnion. You're entitled to 1 free report each year from each bureau. Review these reports carefully for any inaccuracies. If you spot any, dispute them right away. You can do this online, by mail, or over the phone. The bureaus are legally obligated to investigate your dispute within 30 days. Regularly reviewing your credit reports can help you catch and correct errors that might be hurting your score. Now let's quickly go over the remaining 5 tips. First off, aim to limit hard inquiries. Each time you apply for credit, a hard inquiry is made, which can negatively impact your credit score. So avoid applying for credit unless absolutely necessary. Next, pay off debt rather than moving it around. This strategy, known as debt reshuffling, can seem tempting, but it doesn't eliminate debt. Instead, it simply moves it from one account to another. The best way to improve your credit score is to pay down your debt, not shuffle it around. Then, it's crucial not to open unnecessary credit lines. Yes, diversifying your credit mix is important, but that doesn't mean you should open accounts you don't need. Too many credit lines can actually hurt your score, not to mention make it harder to manage your finances. Fourthly, if you've had credit problems in the past, don't despair. You can re-establish your credit history. Start with a secured credit card or a credit builder loan, make small charges, and pay them off in full and on time. This can show lenders that you're responsible and can manage credit effectively. Lastly, if you're feeling overwhelmed, don't hesitate to seek help from a credit counseling service. They can provide advice, help you create a budget, and even negotiate with creditors on your behalf. Just make sure the service is accredited and reputable to avoid scams. Remember, improving your credit score is like running a marathon, not a sprint. It requires patience, discipline, and a clear understanding of your financial habits. But the rewards are well worth it. A higher credit score can open doors to better loan terms, lower interest rates, and more financial opportunities. Implementing these tips can help you boost your credit score and secure your financial future. Now that we've covered the 10 tips to boost your credit score, let's summarize what we've learned. First off, paying your bills on time is the cornerstone of a good credit score. This simple act demonstrates to lenders that you're reliable and can handle financial responsibilities. Second, keeping your credit card balances low is also crucial. It's not just about having credit, it's about managing it wisely. A low credit utilization ratio shows lenders you're not overly reliant on borrowed money, which can increase your credit score. Thirdly, avoid closing unused credit cards. Even if you're not using them, these cards add to your overall credit limit, and thus lower your credit utilization ratio. Fourth, diversify your credit mix. Having a variety of credit types like a mortgage, auto loan, and credit cards can positively impact your credit score. It shows you can handle different types of credit responsibly. Fifth, make sure to dispute any inaccuracies on your credit reports. Errors can drag down your credit score, and it's important to keep your credit report as clean as possible. The remaining tips include not applying for new credit too frequently, contacting creditors if you have trouble paying bills, staying well below your credit limit, becoming an authorized user on someone else's credit card, and seeking the help of a credit counselor if needed. The long-term benefits of maintaining a good credit score are numerous. It can lead to lower interest rates, which means you'll pay less over time when you borrow money. It can also increase your chances of getting approved for a loan or a credit card. Plus, some employers check credit scores during the hiring process, so a good score could even help you land your dream job. But remember, improving your credit score isn't something that happens overnight. It requires consistent effort and sound financial decisions. Improving your credit score is a journey, not a sprint. Start implementing these tips today, and you'll reap the benefits in the future. And that's a wrap on our 10 simple tips to boost your credit score. Now, the ball is in your court. It's time to take these tips and put them into action. So let's make a commitment right here, right now, to start making those changes. And hey, we're all in this together. We'd love to hear about your progress. Share your journey, your challenges, and your victories in the comments section. Remember, financial literacy isn't just about knowing the facts. It's about understanding how to use those facts to make better financial decisions. It's about taking control of your financial future. So let's get started. Thank you for joining us in this journey to financial literacy. Remember to like, subscribe, and turn on notifications to never miss a video. Until next time, keep striving for financial success.